Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code and this is the Forex Super Model daily review for Thursday the 14th of October 2021. The time has just gone 04:30, 4:30 in the morning GMT. Asian session coming to a close, European session firing up our lunchtime, North American session. Right, yesterday the 13th then, this was Fed Minutes Day. We had a negative opposed driver in the dollar at minus 169. Front and back door flows mainly going into the pound at plus 104, into the euro at plus 97, and the yen is the negative rock at minus 32. Activity plus or minus 202. Over the week then, this is from Monday the 11th open to about 15 minutes ago. We've got a negative unopposed driver in the yen. Minus 533, no backdoor flows, the opposing positive flows mainly going into the pound at plus 281, into the euro at 188, and the dollar is a positive rock at plus 64, activity plus or minus 533. So over the week then we've had the yen weakness driving to the exclusion of all else in the majors, and yesterday this weakness was reduced. And it was the negative rock, and the driver was the negative dollar. So basically the dollar weakened, the yen sort of tentatively thought about slowing up on the declines. The euro sort of stayed put, and likewise with the pound. So the main issue really was the fact that the dollar shifted from the positive side to the negative side. So and then if we look at the intraday, which is the Asian session to about 15 minutes ago, today we've got a negative opposed driver in the yen again at minus 87, no backdoor flows, the opposing positive flows mainly going into the pound plus 47, into the euro at plus 24, and the dollar is the positive rock at plus 16. So you can see that the Asian flows are now mirroring the weekly flows, so we're back to those style flows with a little bit of dollar strength, euro strength, pound strength, and full yen weakness. Right, we'll stop it there and write up the flows. Right, we're back. We've written up the flows then. So the euro's weak except against the yen and the AUD. The yen's weak across the board. The pound's strong except against the CAD and the New Zealand dollar. The Swiss is strong except against the pound, the CAD, and the New Zealand dollar. CAD is strong except against the New Zealand dollar, the AUD is weak except against the yen, and the NZD is strong across the board, and the dollar is weak except against the yen, the euro, and the AUD. So what have we got then? We've got yen weakness again across the board, and this time we've got New Zealand strength across the board. And you've got this weakness in the AUD, arguably after the data. We'll talk about that in a minute. And that's where we are, so and take your pick in the middle. Right, so what's going to knock it about, or has? Right, we've had this AUD employment change, which came in pretty neutral really as far as we're concerned, and the unemployment rate was an improvement as far as we're concerned, yet generally the AUD is weak apart from against the yen. China CPI came in positive, so consumer price positive, producer negative. China's CPI came in negative, so it was weak, yet the producer price came in positive. So and we've got some tier 2 US jobless claims out today. So after the Australian data and the China inflation data is pretty light, we've only got tier 2 jobless claims in the US. And tomorrow, Friday the 15th, we've got US retail sales and Michigan consumer sentiment. So there isn't a lot going on really going forward either. US retail sales are probably the peak of it. Right, so we'll stop it there and write up the asset classes and then do the analysis. Right, we've written up the asset classes then. So the US dollar index basically pumped up, came back. It's now 0.22 from the high. So it's 22% off the modelled high. So it's starting to go a little bit soft after yesterday. Excuse me. Gold arguably appreciated that slight drop in the dollar index, and it's 0.45 from the floor, so it's still below half marks. Gold is still pretty soft. Oil is back, had this break, and it's back at or near just the highs, just sub the highs. It's plus 0.33 from above the resistance, so it's broken a third above the resistance. That's what we're saying. So Wall Street, S&P, and tech, they've all got this same look. They went up, they charged down, they've been chopping around, and they're sort of mid-range now to soft. Wall Street 0.45 from the floor, S&P 0.3 from the floor, and the tech is 0.36. Just check that on the S&P. There's 0.38. Sorry, there you are. So I didn't think that was right. So 0.38 from the floor. So what it's telling you then is that all the equities are below half marks in model terms. The tech closed up on the S&P yesterday because it was lagging, so it's pretty much where they are. So 0.38 plays 0.36, and Wall Street is slightly stronger at 0.45 from the floor. Right, the US 10-year and the bund. This is the price. Remember, so we've got this break downwards in both the US 10-year and the bund. So we've got rising yields. The US 10-year has now come back to the break, so the previous support. And the bund is not quite come back as much. So arguably European yields are still outgunning US yields. So that's something to bear in mind when you're talking about the Euro complex. And copper's had a good break. It's plus 0.15 from the resistance, so it's broken out 15% in model terms. And US steel still bumping along the floor, but it's come up a bit. It's 0.16 from the floor. Right, we'll get rid of that, and then we'll just do the final analysis. So obviously the takeaway yesterday after the Fed minutes is that the dollar basically softened, and this is likely to be positive for equities and commodities, and arguably gold. Right, so dollar in the majors, dollar, euro, yen, pound, CAD, AD, NZD, and the Swiss. Right, so we've got starting to see dollar softness, and if you look at, grab this, if you look at the Asian session, we're starting to see a little bit of a perk up in the dollar again. So the flows, the dollar's the positive rock. So not totally selling the dollar off. The euro, the yen is still very soft, so it's negative, and that suggests equities are still going to go charging up. The AUD is soft at the moment, but we believe the AUD will catch up. So and the CAD is charging up off the back of oil, and the NZD is up as well. And the likelihood is the Swiss. What is the Swiss doing? Let's have a look. The Swiss is strong at the moment, but the likelihood is the Swiss going to about turn. So that's where we are, and the euro, quite frankly, is likely to head up, and the pound is neutral to up as well. So you're going to have flows predominantly out of the yen off the back of this equity transmission. The AUD is likely to play catch up, so positive there. The CAD's going to be relatively strong if oil keeps charging up, and the NZD will be strong as well. So, and the Swiss is likely to do about turn and soften, and the dollar, well, the dollar will be neutral, probably to soft, but it's showing a little bit of strength at the moment in the Asian session. So, but that was after the yesterday's significant sell-off. So the likelihood is it'll be neutral to soft, and the pound will be neutral to high. So the big movers are going to be the yen again. The yen off the equity transmission. You'll probably want to be short the yen unless the equities start collapsing, and look for a turn in the AUD. And so forth. So anyway, that's where we are. So hope that was useful. Thanks for watching. See you again tomorrow for the daily briefing. Goodbye.